Yeah, by definition, the economy is our consumption of goods and services over the long term. The stock market gives us a snapshot of how we're doing, but day to day, it's not the same at all. We're still at the highest unemployment since World War II, but your 401k has come back very well since the crash back in March. Alan Lancz from Lancz Associates, a worldwide firm that gives investment strategies to clients. Stocks reflect a company's health at the moment and speculation for the future, and it's watched closely by investors. But on Main Street USA, the economy is adapting. It's not all the way back. It is making progress.
You know, I still think there's going to be lingering effects with COVID. There's a lot of negatives as far as on small business. Wall Street is capturing a lot of that small business, the Walmarts, the Costco's, even restaurants. The individual private restaurant here in Toledo struggling, Chipotle National with the carryouts and the drive-thrus and with their organizational skills, they've got the wherewithal not only to survive the pandemic, but actually excel in the pandemic.
We'll have more with Alan Lancz as the week goes on, including what's needed for the next stimulus package from Congress, if that ever happens. You heard the phrase stocks and bonds. A lot of faces just go blank, right? It sounds so complicated. If it's investments or your 401k, profits off stocks are taxed. Bonds, if you buy government bonds or munis, they are not taxed at all, but they don't make the kind of money as stocks, especially now. Here's Alan Lancz, an investment advisor. Lancz Associates, the Fed has kept the interest rate next to nothing to prop up our economy in the pandemic, and they've said it'll stay that way for a few years, so why get bonds at all?
I think you get to the point where you really have to make the right decisions. Like bonds right now, unless you think it's a negative interest rate environment coming where we're going to actually have negative rates like some of Europe and Asia, you're going to lose money in bonds. There's more risk than reward. So the standard, 60% in stocks, 40% in bonds, I think is really skewed, and people really have to readjust their situation. It's no more textbook type business or investing 101.
On Thursday, Alan Lancz talks about a priority for the next stimulus package, like helping small business.